Come with me and you'll be in a world full of pure imagination. I mean, I feel like every day I log into the stock market, that's kind of what it's become here. And my God, I'm looking old, man. I got to fix this hair. I'm kind of getting that widow's peak. 30's not looking too great on me here, eh, folks? Got to pull that Elon Musk and get some of that hair transplant done. Probably won't take it all the way to Turkey, but hey, anyway. Well, we're going to talk about this market, man, because it is absolutely beautiful sometimes what the YouTube algo serves up to me on that juicy dish of nobody pays attention to these smaller channels, but we know you like to watch them once in a while. So here's a video that's only got a couple hundred views, 1,000 subscribers, but my God, it is pure gold when it comes to somebody who is taking the edge off shorting Palantir. We're going to talk about that as we kind of review the broader markets here, because there's no doubt people are sitting here speculating on Palantir and Tesla, and they're kind of frothy a little bit, but we're going to talk about the other aspects of the market as well. I think it's kind of intriguing that when we take a look at actual search traffic, like everything is petered off quite dramatically. And I'm curious if this is like that little sign that maybe we're kind of getting to the peak of like total buying opportunity here. Obviously, people will short to like the cash on the sidelines, but it's all who says. So like who knows? Who knows? This is a pure imagination. We're just having some fun here, folks. But this video, I promise you, it's going to be worth it. So just bear with me, because first and foremost, let's just talk about where we're at. Because when I looked at my portfolio, as mentioned, I reset all of my gains just so we can see what the portfolio actually does in the next year. Obviously, taking a bit more of a conservative approach with a concentration of Google, VDY, SCHD, VOO. And I'm like, how am I up 0.7% since the beginning of the year? Because I'm looking at like my returns on these stocks, and I'm like, they haven't done anything. The S&P's up 0.5 percentage point. Where's this extra bump coming from? And then it hit me like a bag of bricks. Canada sucks. Actually, it's not just Canada. It's everywhere else in the world. The only place you want to live right now is the US, making them US dollars, because the Canadian dollar just tanked yet again. And I didn't even realize this, but when I'm trying to figure out where the gains came from, and I'm like, heading into the end of this week, the Canadian dollar dropped by 0.5 percentage point. And with most of my money in the US, that bumped my total returns, because the spreadsheet you see calculates the currency conversion. And I was like, holy crap, another day the Canadian dollar just absolutely blows. Another fine reminder to try and get some foreign assets in your portfolio, which again, I always think it's funny that people won't convert currency, but then they'll go and cost average into VFV, which is literally the same. So just keep that in mind, right? But still, that's kind of where the portfolio is at. And I'm very much looking forward to some dividends to reinvest here. If you got VDY till you motherfucking die, we're getting a nice juicy check. I mean, it's nice getting that 4.44% yield. We're getting that check, I think, on January 7th. So another couple days into next week, we'll get some more cash to invest. Where it goes, you'll have to subscribe to find out, baby. But let's get into this. Let's see what's going on, because obviously, as many of you are aware, I am relatively bearish on this market. I'm a cost averager until I die. I know the market's going to crash eventually. None of us just know when. So you kind of just got to mentally prepare yourself for upwards of a 40% correction in your portfolio. You can't own equities. It doesn't even matter if you own broad-based XEQT. Like, you have to be aware everything can go into a catastrophic collapse, and you just got to understand it. You just got to mentally be like, okay, this is going to happen. I'm aware of it. I got some cash on the side for it, because you just never know. But I'm going to keep buying in the meantime, because obviously it was like buying stocks in 2016 saying that they're too expensive, and then 2020, here's the crash, but it never went back down to those 2016 levels. However, I got a video here for you, because this guy just takes it to another level for me. I don't know what it is with the YouTube algo, but man, they served up one hell of a good video for me here. So this is Alex Pitty. I don't know who this guy is. He gets no views. He's got like hardly any subscribers. And I mean, look at this guy. This guy reminds me of the YOLO Wolf days. A little bit more intelligent, I think, but oh my God, look at this guy. I love the desk, first and foremost. We're talking about a desk that looked like it was made back in the 60s or 70s. This dude's probably sitting on. Could be a Canadian. Looks like he's dressed for colder weather. He's got his nice little Stanley Champions thing up in the left corner there, his hat. This video just spoke to me, all right? I'm like, this guy says it all. I like the background there on his desktop is CEO. Let's just get into this. It's a 9-minute video, and then we're going to look at some Tesla videos and some other stuff that I think are just super interesting. I promise you, this is worth the wait. This is like gold. This is like pure gold. So let's take a listen. This is awesome.
I'm short Palantir. I wouldn't recommend shorting Palantir, but that's what I'm doing. So I'm going to explain why I'm short Palantir. I had been short Tesla. I recently covered it for about a 19% gain. So that worked out well. My shorts are small. My longs are large. So it kind of works out where Can't lose.
Love that saying. What a great saying. My shorts are what I already just missed that. And just
That much money if you're shorting. All right, so I'm going to go over why I'm short Palantir and have some slides on the side. All right, so this chart shows the price to sales ratio of various software as a service companies, some of the fastest growing ones. It's easy to see that in the 2021 period, there was a lot of speculation, and so the price to sales ratios were high. But it made sense to a certain extent because people were staying at home and sales growth was exploding, which gets me to the interesting point here. So this is a little bit old, but it has Palantir at 73 times sales. It changes day to day, but this is around where I shorted it, so it makes sense. So Cloudflare grew sales 52% in 2000.
I just love this guy's demeanor. I'll speed it up a bit just to get to the points here. It is a 9-minute video, but the guy like really puts in the homework here.
21. In 2020, Snowflake grew sales 173%. And from 2019 to 2021, Zoom grew sales 702%. But in 2004, Palantir was expected to grow sales 25.6%. So you can see the sales growth doesn't really add up. Some of the price to sales multiples were high, especially when Snowflake went public. It had a really high price to sales ratio.
We'll
But it was growing,
bit here,
growing sales at 170%. So the ratio doesn't really add up if you're looking at growth and sales and the price to sales ratio. It doesn't add up. It should be growing faster if it wants to have a 70 price to sales ratio because that's always going to compress over time. Either it's going to compress as the stock falls or because sales rise. So I just have
look at the level this guy goes to. I wonder if you could just Google this. He literally goes back to like way back when you had to get like printout on newspapers to get valuations of stocks. Like the level this guy is taking it to is awesome.
Chart of a few speculative bubble stocks in the 1999-2000 tech bubble boom. We have Cisco at 148 times earnings, AOL at 217 times earnings, Oracle at 152 times earnings. And and the best companies are the ones that are still around now, but their stocks crashed, and some of them don't exist anymore. So that's just a comparison to now. It's similar in the sense that we're in like an AI bubble compared to the internet bubble, just two different bubbles. So investors, I mean, the Palantir people aren't really thinking too clearly, but they do say that it's like Nvidia, because Nvidia's growth exploded. But Nvidia's growth is a lot faster than Palantir's was. They're not the same at all. So Nvidia's sales increased 379% from fiscal year 2023 to fiscal year 2025. The fiscal year timing is a little bit off for all of them. So, and then Palantir for a similar time period from 2022 to 2024, their sales were only up 46%, which shows that the growth are not comparable. Palantir is linear, Nvidia is explosive, it's exponential. So, and the key point is timing, right? So
he makes a good point on timing, but I do want to point out that if Palantir, like the only way they can justify this absurdity is if they literally get to a 50+% growth rate, because everybody was screaming Palantir when the stock was going down. And like you could look at software companies or even e-commerce companies that have been doing much better than Palantir from a growth standpoint. But I mean, they are growing. You can't argue that they're heading back to a better place, but are they going to get back to where they were in 2021? And we're going to get into way more data, but I just think this is fascinating. So we'll just listen to a bit more.
Nvidia had its growth already because the AI boom has been really strong in 2022, 2023, 2024. Those are the big years for the AI boom. 2025, 2026, and 2027, those might end up being the bust. So the idea that Palantir is going to have faster growth than Nvidia had, the time doesn't add up because the AI boom is going to turn into a bust. It doesn't work. So Palantir is not the next Nvidia. They're both on the same time horizon. So I think that Palantir's growth is going to fall in the commercial business. All right, so this just shows Palantir's market cap compared to like companies in a similar market cap range, and then it's sales.
I've talked about this because, like, if you look at Adobe, there's a lot of companies that are trading in similar market cap value to Palantir, which is like absolutely absurd when you look at like the revenue difference and you ask yourself, for what you're paying, would you be better off buying Adobe? This guy does some comparables with like GE and just other companies that aren't tech or like software related, but still, like, it's pretty astounding.
And the sales aren't really the same. Now, of course, obviously, Shell and Philip Morris and GE Aerospace are growing much slower. Intuitive Surgical is growing pretty quickly, but yeah, so they're different. It's just funny to see like these large companies compared to Palantir's income. I mean, like,
It's
476 million compared to Intuitive Surgical's 2.24 billion, and a similar market cap. It's wild. All right, so I found this. There was this article, and I put in for a correction, and the article was changed slightly, but it's still a stupid article. But
You gotta love this guy. Like, he's literally fact checking articles and then complaining to them. Where did this guy come from? It just, like, I can't get over this.
the valuation part is funny. It's like funny to see what people who are bullish on Palantir say, because you get to see what you have to believe to think that it's a good investment, or they don't understand basic numbers. So they have the Palantir had a 650% premium on the valuation. So its non-GAAP PE was 188 compared to the median of 25, which is funny. But the part that I corrected with this article, it got changed, but it's funny to see what they said beforehand, like what they were actually thinking. It's not a typo, it's just, I don't know. So they have they have Palantir's earnings per share expected to grow at 1,125%, which it doesn't make any sense. Like, it's not going to grow 1,000%. That's not even correct. It's so they have it they have it projected at 1,125% earnings growth, but it's not going to grow 1,125%. Doesn't even make any sense. It's pretty funny. Their actual earnings growth is expected to be 52% in 2024 and 25% in 2025. So I like, it's just the fact that somebody would write that and they're like a bull on it, and makes it like, it's just like a sign of the times, is what I think.
I think it's time. I want to reach out to this guy and I want to get a sense of this dude, because, like, he just seems like one of those guys that doesn't watch anything on BNN at all. He's just like, he sees something and he's like, I'm going to sit here for a month and stir on this.
It's just a weird thing to say. Their earnings are going to go up 1,000%. They're only going to go up 25%. Like, what? And that's a bull, like an article. It's not somebody on social media. So now I have just a little glimpse of what actual users are saying on Reddit of Palantir for their commercial business. And keep in mind, Reddit shows you what people are agreeing with and what people are disagreeing with.
This guy's in a helicopter
zone. Honestly, it might be the worst tool I've ever used. I refuse to work for a company that uses it ever again. Foundry is if you took Databricks and made it 10 times harder to use and took away notebooks for data science users. It almost feels like a scam how unfriendly it is and how shoddily different things are implemented. Go with Snowflake and avoid Foundry at all costs. 82 upvotes. Net.
Like, this dude not only is like reading this, he printed it off. Like, he's reading it in his hands. Like, this dude's got like a whole stack of, I just picture there's a board somewhere in that room with, he's got like a string linking everything together on why he's shorting Palantir.
Upvotes. It's borderline unusual. You know how Hulu constantly freezes, crashes. You can't be fixed. Any of the menus, random, unexplained things happen while you try and hit the back button. Imagine doing data engineering in an app like that. So they're saying Hulu is a bad app, and it's similar for data science, except not for watching videos. And then I have a screener. I just looked at the most expensive on a price to sales ratio. And if you look at Palantir, it's like 170 billion compared to like tiny things. Like tiny companies will randomly have like a high price to sales ratio, maybe because they don't have any sales yet, or they have a very tiny amount of sales. But companies that have like $170 billion, $180 billion market cap don't typically have 60, 70 times price to sales ratios unless we're in some sort of bubble. Now, if you look at if you remember the original chart I showed compared to like Snowflake and those companies where they did really grow faster than Palantir, their stocks did bad. So they had price to sales ratio compression from declining stock price and high sales growth. Well, so that's like the best case scenario. The worst case scenario is Palantir sales miss expectations, they don't grow as fast, and the stock has to compensate for that and fall even further. So I'm short Palantir. I might not be short for that long. Depends on when it falls and stuff like that. So yeah, this is my video on that.
I can't get over this guy. I give him some love. I don't know what I can do here. The dude, like, I don't know where or how YouTube serves this stuff up, but once in a while, you just find a gem like this, and you're like, oh my god, I can't wait to see how this plays out. Kind of reminds me of the YOLO Wolf with some intelligence behind him, but I wouldn't short Palantir personally. I don't have the balls for that kind of stuff. But what will end up happening, and I'm going to tell you this right now because I've heard a few people discuss this, we're living in a market right now where you're so easily able to leverage up or leverage down. And without actually knowing how to short, for example, like you can really just as easily pull up one of these Direxion. Like this company is making it so easy to short companies. So what we get is extreme volatility to both spectrums because people follow price. They don't care about the underlying fundamentals. And you know that's true. We all know that. I'm not arguing that we're not in a bubble. Like I think everyone's quite aware that the market is very, very expensive and you can invest based on that knowledge, whatever way you want to go. But you have to understand that can last for a very long time. We don't know how long that can last. But when you get people an easy capable way of shorting stocks without having any knowledge behind it through like third-party ETFs like Direxion here, it changes like so much of the extreme volatility that markets will experience. And we've seen it, right? Like for the last 5 years, the market's gone through a lot more volatility than it has in some time, just because of these mad amounts of capital flowing around, the mad amounts of leverage and how easy it is to leverage. And right now, like nobody's shorting Palantir, like nobody. I mean, the short interest is at 3.81%. Again, it takes a lot of cojones to like take it to this level. And analysts right now, I think, are hilarious because it reminds me of like Tesla analysts where you have price targets as high as 80 and low price targets of like 11, which is just like, it's nutter, right? Like these are stocks if you own stocks like this, and I'm going to tell you this right now, if you've done successful in this, you have not made money if it's only on paper. And if you do not protect that money, I promise you, when these chickens come to roost, if they do come to roost because this company can't deliver, which it's extremely likely that they are not going to be able to match the perfection that is priced in, you are going to get slapped upside the head so hard. And when it drops 20, 30, 40, or 50%, it is going to go a lot farther than that because the momentum is going to shift and people are going to start shorting to the extreme. And then you're going to go through those volatile periods like we went through the pandemic, through 2022. It's just what happens with these kind of hype cycled stocks. Again, you have to be understanding that if Palantir blows it out of the water and beats all their own expectations, they could easily justify the price, but they're trading at multiples like this gentleman said, multiples where Nvidia could justify the value, whereas Palantir is nowhere near close to that yet. So we'll see what happens, but that's Palantir, right? So let's shift a little bit because I want to talk about Tesla, because Tesla, a lot of people, they're like, you're so butthurt about like not owning Tesla. Because yeah, I was just having a really good meeting with somebody today, and we were just talking about this because I told myself that if Trump wins the election, I'm buying Tesla no matter what. And I didn't hold myself to it, and I missed a massive trade because I was going to trade it, and I just didn't. And yeah, I'm kind of butthurt about it because I only made like a 50% gain. Boo-hoo, poor me. I walked away with 10 Gs. Oh my God. But now when you look at this stock that I was valuing somewhere between 1 and 150 is trading up at this like absurd level. And you can't like, I just don't understand how people value businesses today because they just immediately shift. They're like, it's all about the auto business. The future is auto. And now they're like, forget auto. Auto's not growing. It's trash. The future is robots. The future is energy and all this other stuff that could massively outweigh the value of their auto business, which, by the way, is worth the value of every car company combined. And even if self-driving comes into fruition, guys, you know how much Uber and Lyft are worth combined in the taxi industry? Nowhere near fucking close to what Tesla's currently worth today. And I just want to point out that self-driving doesn't exist yet. And it just blows my mind at how Elon and all these people are shoveling it to us like it exists today. Google is the only company that has a reality in it, and they won't even share with you interventions. They won't tell you like the fact that people sit behind a desk when an intervention happens, somebody manually takes control, and then people just run with this stuff like it's reality. But I noticed like the king of all cars, Doug DeMuro, and if you didn't watch this Iced Coffee Hour, it's really entertaining for those interested in the auto industry. But this one bit of conversation, I think, really pinpoints the reality of self-driving today.
It's the one car you don't have to look at the road.
Do you think that robo-taxis could ever be a thing at some point?
Yeah, but you know, when?
It seems so far off. Like I'm using the Tesla full self-driving and it's still so buggy.
Yeah.
And it's just, I'm on edge.
Plus, you live in Vegas. Like ultimately, what happens in Minneapolis, right, when it snows? This is what I think about. Like I was self-driving. They got 90% of the way there in a couple of years.
Yeah.
And that last 10% is hard, right? Anybody can make a self-driving car, drive down a road, stop at a stoplight, turn on a simple, nice day, wide road, well paved. But like that's not when I want the car to drive, right? You want the car to drive when it's foggy and icy and you're terrified and you don't trust yourself. You want the car to be better than you. Truthfully, right now, all the cars are worse than you, right? That may not be statistically true, but in those edge case scenarios, you'd rather be driving, right? If it's icy and foggy, you'd rather have the wheel than Tesla full self-drive. And that's the problem. And it seems to be one that they're having trouble surpassing.
Yeah. It could be just a false self-confidence that I feel safer because I'm in control.
Well, a lot
but
of those
the data seems to show.
The data does show. But I think a lot of the data comes from sunny days.
Yeah.
A lot of those systems straight up turn off in snow, in heavy rain, in fog.
Or when you're driving into the sunset. When the sun is shining and it just shuts down.
It's like,
you can't see it, and it's like,
me?
it can't do it either. Yeah.
What do you mean you can't? It's wild to imagine, but that is true sometimes.
This is why the reality of like Elon promising that you're just gonna be able to flick a switch one day and your car will become a robo-taxi, and it's just never going to happen. Because like, again, imagine your robo-taxi's out and a snowstorm hits. Now your car has to monitor weather reports and will likely just pull over on the side of the road somewhere until the weather conditions are better, right? This is like the big concerns in these edge cases that don't get discussed, I think, enough to the edge of like, what does it take to get to that full self-driving? Because Elon is so desperate for this, the money they're pumping into GPUs right now. Like I showed you guys in the past, like go look at their GPUs. Like for a while, they weren't really buying a whole lot. And then within the last few quarters of this, like last year, oh my God, they're like, just more data, more power, more data, more power. And it's getting them so close, but still like, it just won't get there. And you look at some of these videos and they look great, but like he's saying, like, we want to see the edge cases because you can't have a million cars get hit in some storm and they all just pull off to the side of the road.
Yeah. So for people who want to make money on cars, what are you seeing these days?
That's kind of the point. Like I recommend going to watch this. I think it's really brilliantly said, but I want to point out a couple things. Then we'll get to some Q&As here. The first and foremost, I consider myself somewhat of a social arb investor. I think some of my best trades came, and just discussing a few people with this today, but just again, finding a direction of momentum, like whether it was the MJ markets, the explosion came. I feel like you can make a lot of money in these kind of companies if you're prudent about when you're buying them. And I noticed that like Dumb Money as a channel I use as kind of a barometer. And I've told you guys this before, 9 out of the 10 stocks these guys talk about when they're buying them, look at them a year or two later. Almost all of them, Peloton. These guys trade just about everything. Lithium America Corp. They're all garbage stocks in the long run, right? Almost all of them end up going back down. So like when I see these guys starting to buy into Palantir and really pumping Tesla on trades, you know, right now with Tesla dropping, I guarantee you Chris Camillo is probably for like the most part out of his major trade with that company. Like, I just can't foresee that right now. Imagine how difficult it is with cars, and like everyone's talking about robotics right now, and one robotic arm can do far more than these robots that were being shown can do. Like, they're just doing the most simple tasks, things you don't need them to do. A robotic arm can do all the stuff we're seeing. There's nothing crazy about it yet, right? Like, we need super advancements in software and technology before this stuff is ever going to come into fruition. And that's the critical factor that Elon keeps putting in the Tesla statements. Every Tesla statement that comes out with self-driving is that it is technology is the factor to when self-driving is going to happen. And Elon is just promising us another year. At the beginning of this year, beginning of last year, he said the same shit that he's saying now. It's going to be next year. We promise, right? But what I do, like I said, when it comes to social arb, you have to pay attention to attention. Attention, again, follows attention, right? Like whenever one of their grandmothers talking about it, that's where money's going to go. That's where you get the momentum plays. And we're looking at Tesla right now, kind of going through the similar search traffic that it went through in this kind of big boom period. And now it's kind of like fallen off after the Trump hype trade went on. Same with Nvidia. Like Nvidia hype is really burning out here. So it'll be neat to see if it can keep up this kind of momentum. Because again, you only have so much buying power in the market, guys. Like there's a lot of money flowing in from overseas, dollar conversions. There's so much happening that I don't think we can really appreciate Like, and again, a lot of you, and we'll get to the comments because a lot of you have been pointing out some of the valuation metrics on the broader market. Crypto right now is struggling to get over 100K, but the attention's dying. Like, the attention's going back to where it was kind of more toward the beginning of 2024. It's come down a lot for search traffic. And what's also very interesting is like VOO. I mean, look at the search traffic for VOO. It blows my mind how many people have just started, you know, really running into these index funds, which is great. It's nice to see people are educating themselves, you know, and there's a lot of attention hitting the broader market. So it's not all just funneling into hype stocks like it was in perhaps 2020 and 2021, right? So I think there is some prudence going on here, but a lot of people call it an index bubble because when you put money in the VOO, it naturally just goes into the upper weightings, which could potentially be a cause and effect to why Apple is trading at a 40 times multiple. For as long as people are willing to hold the indexes, it could help prop up some of those upper weighted stocks. But we'll go to the top here, and I'm going to scale down, and we'll just take a look at a few of your comments here. What do you think about the idea of comparing the market PE ratio to the past 100 years isn't valid because well, again, this isn't like the dot-com bubble. The comparables, I don't think come exactly close. There's a lot of expensive stocks, but I wouldn't say like most of the Mag 7 is like crazy expensive. Like, you can put a really high multiple on a company that is like Microsoft, right? Like, I don't think it's absurd for Microsoft to be trading at a 30 times multiple because the revenue is just so damn stable, right? Like, it's such a diverse business that still has great growth. And it's going to go through ebb and flow periods of bigger growth and lower growth, and they have capital to do so. It's like saying Google, right? I mean, a lot of people are like, oh my God, Google's going to get charged for like monopolistic stuff. Oh, they could lose part of their business. Google has like, I think in receivables and cash, they're looking at like 170 billion. Google could literally buy one of the S&P 500 companies tomorrow with just their cash. They could literally just spawn a new billion-dollar business through an acquisition if they wanted to buy something. Same with like, you know, Berkshire. I don't know what the value of that is into the future and how you value it in a price to earnings multiple. So you have to understand like these high flying Mag 7 stocks, they're not like it was during the dot-com era. They're monopolies. We're moving to a world that is going to look a lot more like Russia. I think we're going to get like oligarchs is what it seems like, where all of a sudden CEOs are playing into politics like we're seeing now. Billionaires are the ones that are running the economy. I mean, that's what it really feels like is going on. And unfortunately, you know, the government's not going to step in because we're greedy. We don't want Google to get broken up. You want to make the returns, right? So it's a weird world where we're looking at companies that are trading at $3 and $4 trillion market caps that still have real potential to get much bigger. And that's crazy. Like, it's honestly mind-boggling when you think about it. And everyone's just like throwing $1 trillion numbers at crypto and Tesla and these companies, and they just think it's normal. It's like, guys, this is a weird market we're in right now, right? Like, it doesn't feel like a healthy market when these big companies can just gobble everything up and there's no regulation around it. But yeah, it's just crazy. So you kind of got to pay attention to what's going on. But people will line outside for days to buy their favorite name brands, but will sell their stocks when they're on sale at these. Yeah, but that's the thing, right? Like, look at TELUS. Look at, I mean, the telecom giants are outperforming the S&P 500 this year because a lot of people sold them to tax loss harvest, and now they're buying them back probably after the 30-day wash or whatever they're doing, right? But yeah, that's the problem is money follows momentum, whether it's to the up or downside. People are going to shit on companies that are tanking. Look at Nestle right now. Nestle, like, I'll pull up some of these stocks because, again, I try and fight not buying a bunch of individual stocks because I can get the exposure through a lot of ETFs. Makes life a little bit easier. I like concentrating into companies I believe in and focus on index for the rest. But look at a company like Nestle, for example, here, right? Which in year to date is now up 6%. Like, think about that. Like, why did this stock just pop off for no reason? Well, it's obviously like tanked. It's down 58% over 5 years. Guys, this is a conglomerate. This is one of like, or this is not Nestle. What am I looking at here? This is not the Nestle stock. Sorry. I'm like, I'm not even looking at the right thing. The chart, there we go. Nestle, there we go. Year to date, the company's not up. Sorry. I was still thinking this was a similar reaction to what we saw with like TELUS, for example. But I mean, look at this company, right? Like 5 years, this thing is down 27%. Oh my God. Could you imagine Nestle? What is it from peak to trough? Peak to trough, 41%. Like, this is a $200 billion company that a year ago was worth probably closer to 300 or 400 billion. Trading at a 17 times multiple. They're getting hit from like cocoa prices, sugar prices. There's a lot of weird shit going on in the food market right now, but this is one of the largest food companies on the planet. And same with like Hershey. Like, there's so many companies like this, and people are like, they're garbage. Don't buy them. They're trash. It's like, okay, well, You know, you think Hershey's going anywhere in the next 50 years? I highly, highly doubt it, right? But I'm seeing a lot of examples like this. And again, I think TELUS is a great example because like these are infrastructure companies that just can't go anywhere. So when you look at the year to date, like it's up 1.58%. But again, it just over the last 5 years, just absolutely abysmal crash. But again, these companies can't go bankrupt. They just can't. There's just no way you could have it happen in this day and age. Don't buy SCHD. I don't care. You guys, like as soon as you start speculating on tomorrow, I don't give a shit. I'm not here to like trade tomorrow. Like I don't care if the dollar goes lower or higher. I'm still going to convert currency no matter what. It's just I want to retire probably in the next 3 to 5 years. Like not necessarily retire, but have that kind of money that like no matter what, if I lose my job, I'm good. But like it doesn't matter. I've got like 30, 40 years of investing ahead of me or letting my portfolio do whatever it's going to do. And that dollar is going to go through periods of insanity, right? Honestly, at the end of the day, right now is the best time to own the US dollar because every country is collapsing to some extent. When I mean collapsing, I mean you just listen to the moaning going on. Like there's this echo that goes on through the entire world that is just not happening in the US. People in the US are like, oh, it's so expensive and life is so hard. But it's like, buddy, go anywhere else in the world and see the luxury you have. Because like the US dollar right now, like, and it's, I don't know, I got to give Jerome Powell props because I know they're doing this purposefully. There's no way they don't know what they're doing because they should cut interest rates. Everyone knows they should cut interest rates, but why would they? Why would they cut interest rates when their dollar is sitting at a fucking 20+ year high? Their dollar has not been this high since the dot-com bubble burst. When the dot-com bubble burst, everyone took their money out of the U.S. markets and the dollar just tanked. Nobody wanted U.S. dollars. They're horrified. The U.S. was a bubble. Get out of it. But now we're back to where we were, guys. And do you understand the magnitude of this? This is why like Donald Trump is going to have control over tariffs and all this stuff because our global purchasing power has given us such like the US such an upper advantage globally. But you go listen to people in Japan and they're like, we can't travel. Things are too expensive. Imports are getting expensive. Canada, same bullshit. Everything is too expensive. We can't afford to import shit. It's a nightmare. We're going to get tariff. Like every country, Europe, you fucking name it. The US is living in this beautiful dream world right now, and they think they have it like they have it so hurt. And they're like, you hear them whining, and you're like, shut up. You guys are winning at every angle right now. Your stocks are at all-time highs. Your dollar, it makes like you could take your dollar and go retire on like $100,000 anywhere in the world almost, with the exception of maybe like, you know, Europe or like Canada. I mean, take it to like India, take it to Brazil, take it anywhere, guys, and you're loaded. Like you're beyond loaded. It's insane what the US dollar is worth. This has made you guys so rich. If you can work for US dollars today, like the magnitude of the value is just nuts. Robo-taxis will probably be the only when the roads are compromised. Yeah, maybe. Or computerized. Yeah, potentially. Hush, hush. Jeff, buy VDY. Put some dry powder aside for the pasture. Yeah, look, the only recommendation I can have to like deal with these kind of market environments is you can't stop buying. You can't be like, oh, this is too expensive. Wait for it to correct. You don't know when it's going to correct. The whole point is you just keep buying. Don't ever stop buying and have an emergency fund just for the stock market. Like I've always got some cash on the sidelines just in case the market decides to dip 10 or 20%. And then I can start doubling up and getting super aggressive when things get really hurt. But right now we're just sitting here like I became a millionaire last year. Sounds great. Do I care? No, because I presume my portfolio is going to be worth potentially 20 or 30% less at some point, which is why I buy ETFs, right? That are like SCHD and VDY, because I think balancing it with some stocks that just aren't going absolutely bananas might be a healthier thing to do in this market environment. But again, I said that shit a year or two ago and didn't really work to my favor yet, has it? And then the same thing with Palantir. I thought Palantir was expensive at $20 and here we are at 80. Like, I mean, who the hell knows what's going on, right? Things are crazy. I'm still stuck in Canadian stocks, hoping once they fix the tax issues, I'll get my moolah back. I'm not sure what that means. I'm curious now. John Bogle predicted lower returns due to high PE ratios. It's a different game now, though, I think. I don't really think it's a different game. I just think people don't have a long enough perspective because we're so caught up in the macro of just looking at what's happening today. And it's really hard to look at because past performance just doesn't represent future returns. There's no analyst out there. Again, it's a world of pure imagination. It's literally a joke, guys. It's pure fugazi. If somebody tells you they know what's going tomorrow, fire them. If that's what your financial advisor says, I know this is going to happen tomorrow, fire them. Nobody knows what the fuck's going to happen tomorrow. So you can't bank on that. You can only bank on a strategy. You just say, hey, here's the strategy. I have to stick to it no matter what. I have to ride the volatility. I have to know I've got 20 or 30 years ahead of me and just Ride through it, because a bubble doesn't really matter. I mean, 15 years later from the top of the dot-com bubble, you're back in the green. Unless you couldn't stomach it, and unless you didn't cost average, you were screwed. But yeah, index bubble keeps things stable. Dumb money trying to be smart money. Well, smart money cannot be the index. It's funny. What else we got going on here? Before we finish up, being Canadian, am I buying SCHD? You don't need to buy SCHD. There are a lot of other ETFs. Just because I'm doing it doesn't mean you should be doing it. I literally don't know what I'm doing any more than you guys probably do. I'm not a genius. Anyone that tells you they are is a liar, especially the Palantards and the Tesla pumpers. And it can only drop this much, guys. I can only do the value should be here. I can talk like every day. That's all you're going to hear every fucking day. And it's meaningless, pure meaningless. They just want your dollars because we're YouTube clowns. We're the endless clowns of YouTube making money off you guys and your clicks, knowing that shit's going to get real like it did in 2022. I mean, guys, I had a lot of friends that were YouTubers and they're not YouTubers after the 2022 crash. Because what ends up happening is we all focus down into topics you guys want us to talk about. And then when the market turns in the other direction and all of you that caught the top of it got wrecked, now you're turning against those YouTubers. And then those YouTubers aren't getting the same views they were getting, talking about the same thing over and over again. And then they don't know what to do. And then they're getting so much hate, they can't handle it anymore. I watched that happen to I think about 3 or 4 of my 2 really good friends, 3 or 4 guys that I knew don't exist on YouTube anymore. And they were crushing it during 2020 and 2021. They were hitting 100,000 plus subscribers. I'm not going to share their channels because I don't want to give them flack for anything, but they were crushing it at the peak of the market. And then out of nowhere, they just stopped posting YouTube videos. And I don't know what they're doing now, but I know they're rich. I know they made a lot of money because they got in early, like a lot of the YouTubers that are pumping these stocks do. SCHD is garbage unless you're rich and old. Yeah, but it depends on your goals, man. It depends on what you're trying to achieve. I told you guys, I don't know how stable my job is. My job has never been that stable my whole life. I've been self-employed. There's always concerns that the longevity of my job isn't going to be a 30-year career. So for me personally, I like knowing that I can have some backup income. It's not huge. I mean, my yield on my portfolio is nominal at best, and same with my wife's, but we can still use that income with our emergency fund and have more than a year's worth of income if I have to draw against the dividends. It depends on your goals. I wouldn't say SCHD is garbage, especially now that people that are looking for hedges that might be older, might be in retirement like my parents that maybe can't handle mass volatile swings in growth stocks. Right? I mean, it depends on where you're at. There's nothing saying it's trash. It might be trash for you, but that doesn't mean it's not trash for somebody else. Being Canadian, would I be better buying VDY or SCHD? Advice would be greatly appreciated. I can't offer financial advice. I buy both. I love both those ETFs personally, but you have to keep in mind VDY is heavily concentrated and SCHD, it depends on what you're trying to do. If you're looking 30, 40 years out, I don't recommend VDY or SCHD. If you're a 40-year investor, broad-based ETFs, global market funds are probably the way to go. Pure imagination, no doubt. Such a crazy world we live in. I'm telling you, bro. I'm telling you. Kyle, you mentioned low volatility ETF. Yeah, ZLB is pretty good long back. Surprising, the performance had been nearly on par with VDY. It depends on what you want. ZLB, if you don't like volatility, look for stocks that have low volatility. I've talked about them all the time. They're stocks I like, right? Like Waste Connections, you get them through ETFs like ZLB. I don't own them. I like them. I don't own them. So keep that in mind. It's okay, Passive. We still love you, buddy. Yeah, my SHD was one of the worst stocks I picked, I think, in a little while. Have you heard of a graphene manufacturing group? They have graphene slurry for batteries, thermal. No, not particularly. What stock are you talking about? What do you think about Uber for long-term, short-term? I don't know. I don't like Uber. I don't understand. It's like a Palantir. I don't understand Shopify. I understand Shopify enough. I use it, but I just don't want to buy it because it's always overpriced. Constellation Software, very similar. Do you understand Uber that well? I mean, I'm very confident Google's going to disrupt them because, they're doing a pretty good job with their self-driving technology and they're definitely taking market share today. I'd rather own that than I think Uber, because Google, I think, is just a better stock, a better value, and better growth potential. And at least it's somewhat like owning a futuristic Uber that at least is actually operating a full self-driving network, which is kind of cool. Yeah, but have additional Canadian taxes on top of the dividends and ETF fees. Taxes, don't you? I think you're talking to a guy up top there, right? Who's Crown Slave? Yeah, it depends on whether you're using your TFSA or RSP, though, obviously. Thoughts on Bell? Like I said, man, Bell, telecom giants, they're not going to go anywhere. They're going to go through a tough period right now, and they've dropped 50 to 80% in the past. If you're looking for companies and they fit your risk tolerance, they might cut the dividend, but that doesn't mean they're not cheap right now. I mean, you're talking about companies that are literal monopolies that are infrastructure to the way we live. I use Rogers here, is Rogers going to go bust? I'm paying them every month. I doubt it. And again, the revenues aren't like that crazy either. Like they're fairly stable for the most part. But this is what I was telling a guy today. Like you have to understand that people over project the future. So what ends up happening is, and I'm going to give you one example. We'll finish the stream up with this because this is the most brilliant thing I think you'll ever hear about stock market investing. It's just how it works. So let's pull up like TELUS, for example. I'm not going to use Bell, but I'll use TELUS as an example. So if you look at a company like TELUS, right? I mean, their stock has gone down so much and it just doesn't stop going down. Like, why is this? Well, people are projecting that the company is heading into a slower period of revenue growth and slower earnings because of higher interest, blah, 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 you name it, right? But the fact of the matter is the revenue has not actually dropped off yet. They're just projecting slower periods of growth. The revenue has been actually relatively stable through this market environment, but because they've done restructuring costs, and that comes at a major expense because you have to pay when you fire people, you have to pay them severance packages and all this garbage. That doesn't really come out of the revenue, but what it does come out of is the net income, right? Like at the end of the day, you've lost a lot of net income to interest expenses and all this stuff. But hey, guess what? Their net income popped off in the last quarter. It's like, oh, maybe we're stabilizing now. And what's going to happen is if their net income continues to recover, all of a sudden the market's going to wake up and they're going to be like, oh shit, we were wrong. We overprojected the detriment of this company's growth. And now it's going to go in the other direction. So now we're going to start pricing that growth back into the future and the stock will infinitely start going up again. That's just how the market works. Like it's pure imagination, and just what direction are we going in with that imagination? So like that's what I was saying with TELUS. Like sometimes you're better off sidelining these stocks, trying not to catch the falling knife, and wait for the sentiment to shift and wait for the earnings to stabilize, and then just start cost averaging into it. You might miss the initial 5, 10, 20% bump, but once you know that rhetoric is shifted, then you can start buying the growth again. And then usually it's a more prudent strategy that can play better to your favor if you're cognizant and you're really paying attention to that stuff. Any thoughts on liquid natural gas and these supposed data centers? Kevin O'Leary and Dana Smith wants to build in Alberta. I mean, the largest natural gas powerhouse is like Canadian Natural Resources, right? And I think they partner with the government because they're building like a multi-billion-dollar natural gas processing plant or something so they can ship natural gas overseas, which is speculative because I don't think a lot of countries actually want our natural gas. But if you want to play natural gas, Enbridge is probably the best player because they're literally the largest natural gas powerhouse in North America. They control all the bloodlines for oil. They're more of a utility than anything, and they did really good with that acquisition in the United States, so they've been doing pretty well. So yeah, now let's take a look at natural gas as a commodity, though. I don't like it as a commodity itself, but it's definitely highly used. So like you have to recognize it's not really going anywhere. And I think I think it's having a rally back just because it's winter, so a lot of people are tapping into their natural gas again. Yeah, I mean, look at natural gas. Like in the last year here, look at how much it's starting to go up because we're back into the Christmas season. Because if you look at every holiday season kind of coming into the winter seasons, you should see a spike in natural gas prices because people are just going to use more. The demand goes up. So yeah, I mean, the companies are going to be doing a bit better just because the demand's higher, but I still think Enbridge is the play for that. It's just a much more stable company, I think, and they're going to do good on the back end of lower interest rates. They have a lot of debt. So they're interest rate sensitive stocks. I think telecom will recover, but not sharply. Yeah, they're not like explosive stocks, right? They're stocks that if you can buy them at a good value and you're willing to hold them long term, they're great cash flow generators. So you can just hold them for cash flow. But thoughts on Tidewater stream bankruptcy? I'm gonna have to look into that. But before we ramble on too much, folks, I wanted to keep this stream relatively tight knit. I think there was some real entertainment here, and I'm really much looking forward to seeing how this Palantir short works out for that guy. And I hope he keeps posting videos because he seems like a character. But stay cool, stay awesome, folks. And as always, I look forward to catching you in the next one.